Mr. Sen, first of all, Happy New Year to you and your team, and great to speaking with you in this new year, because the markets seems like are in for a cheerful start to this calendar year. Help us with your outlook on the Indian markets for 2025 and the big themes that you're tracking.
Hi, thanks for hosting me on the show, and a happy new year to you and everybody on your team. So we are expecting the Indian markets to remain positive for CY25, albeit the returns may be a little more muted, probably in the mid-single digits rather than the teen return that we've been used to. And this is when we're talking about the headline indices. That having said, we think the downside risks are fairly limited at this point. The earnings shock that we saw in the second quarter is largely done. It's not going to recover very soon, but further shocks are probably unlikely at this stage. We continue to prefer, um, small and mid caps over large caps, because that's where we think a lot of the earnings growth will come through. But one has to be a little mindful of valuations in that space.
But it's easier said than done, because obviously valuations are frothy. But I think the point that you are making, that the Indian markets are being driven by domestic liquidity, and domestic liquidity clearly favors the broader end of the market, is something that does make sense. But I wanted to specifically talk about financials, if I can, because that's one segment of the market which has underperformed for the last couple of years. What's your sense in 2025? Because on one hand, you have the expectation of credit growth moderation, but valuations look a lot more comfortable there.
Short-term rally in financials. We've been saying that from October. Some of it played out. It is not fully played out. There is a TINA factor there. Many other sectors, the earning growth is there, but the valuations are a little stretched. The macro in terms of regulatory policy, if we do see a turn in the liquidity cycle, we haven't seen a decisive turn yet. After the RBI changed its stance from tightening to neutral, we haven't seen that translate into a turn in the liquidity cycle, and that's happened because of FPI outflows and the pressure on the rupee. Once that is behind us and we see domestic liquidity come back to neutral or maybe even positive, there could be a short-term rally in banks, because that traditionally does help banks, especially on the funding side. The other positive that could come through, if the RBI relooks their aggressive regulation of credit growth. We now do have a situation where credit growth is below the teens, and that is impacting both consumption and overall economic growth. So if some of those are revisited, then there could be a relief rally in the banks. However, from a longer term perspective, from a 1 to 2 year perspective, we continue to be underweight in financials, because I think private sector financials have moved to a new normal of lower ROEs and lower growth, and valuations are fully yet to adjust to that new normal. There is still some downside to valuations. So this sort of time correction that we've seen in financials from a longer term perspective could continue for another couple of years.
But Mr. Sen, what we are seeing is that, yes, indeed, there's been a lot of excitement in the secondary market, but even the primary market, look at the numbers there. In 2024, the Indian IPO market zoomed to $11.2 billion, and that's almost doubled on a YOY basis. So what's your take for 2025? Do you believe that it's a bit of a frenzy that is being played out in terms of so many issuances and the kind of investor interest, specifically from the retail participants? How do you see this trend?
First of all, just looking at the absolute numbers is a little misleading, because when looked at in the context of, say, market cap, between 2020 and 2020, India has become a much bigger market. Also, as we've noted in our recent note, we've seen a surge in domestic flows, and we believe that's structural and here to stay and will continue for the next 5 years. So in that context, we don't see the supply and the IPOs that are coming through as a worry. We do think that this will continue, the IPO stream, and that's healthy for the markets, because if there's so much flows coming in, it is good that there is some fresh supply into the markets to absorb some of the flows. Otherwise, you get frothy. We end up with frothy valuations in the market. So we don't see that as a concern, and we do think it will continue. See, it's also a reflection of the changing structure of the Indian economy, right? There are many new sectors which have emerged in the last 5 years because of the digital revolution, because of some of the global opportunities that are coming through. And many of the IPOs come from those sectors.
We'll give you some time, perhaps, Sheshadri, to help with your throat as well. But you know what? Given the time paucity we have, we'll have to let it go in any case today, because there's a lot happening in the markets that needs our attention. We'd love to carry forward this conversation. But thanks, Mr. Sain, for making time and speaking with us. Market looking very good.